Stocks are off to the roughest start in several years, about 4 years to be exact. It's been 2010 since we've had a rougher January. With us now to look at some of the reasons for the, I don't know, do we call this a hiccup, Carl? Carl Eggerss with Eggerss Capital Management.
Morning. We got our...
Yeah, we have you got the pink note.
Yeah.
Good.
I didn't go to the hockey game, but I did get the memo. Yeah, the markets is, I kind of view this as a bumpy road. I think it's kind of interesting right now because we've got a couple things going on. We've had some weak economic reports here in the U.S. and in China. And then on top of that, we've got the Fed saying, you know what, we think the economy is stable enough that we're going to start taking the training wheels off. In other words, they're going to stop buying bonds and keeping interest rates low. So they're going to scale back a little bit. And as they do that, markets are becoming very nervous, and we're having this bumpy ride. But here's the key, and that's what I think investors want to know, and the viewers. Is this the beginning of the end? And are we going to have another 2008, another 2000 dot-com bubble, you know, where you have these 30, 40% drops?
Sure.
Or is this just a temporary bump in the road? And I brought a chart along which shows corrections, meaning, you know, 10 to 20% drops in the market over the last 3 or 4 years. And you can see we've had a 17% drop back in 2010. We had a 22% drop in 2011. In 2012, we had 11%. But here's the thing, in 2013, if you look at the right of the screen, we didn't have one 10% drop in stocks in 2013. So investors got very comfortable with the fact that we're not going to have this drop. And now that we may be going through one, I want to point out that a couple of things. Number one, that it's common to have a 10 to 15% drop in the middle of the year. And number two, we haven't had one in so long. We are due for one. But the key is, as I mentioned earlier, we're going to have a rolling over, and is it going to drop 30, 40% over the next 6 to 9 months, 12 months, or is it just a temporary correction? I think it's the latter. I think we're going to have a short-term drop over the next couple of months, which is usually headline-based, which we're getting these nasty headlines of emerging market currencies and all these things. And that's usually short-lived, but it can be short and violent and scary, and I think we're getting those ingredients right now.
And right now we're looking at that chart. Historically, we're looking at double digits, 17, 21, 13,
Precisely,
whatever it was.
yeah.
Right now we're at 5%. So is that to say that over the short period we can look at another 5, 8% drop?
I think that's setting up that way. In fact, if you go back and look, since 1980, the average drop in the middle of the year for stocks has been 14.7%. The average. So those are very
drop
common.
Twice as much.
We could drop another 3 times as what, or 2 times what we've had already, and still be completely normal and be within a bull market. You noticed each of those drops, the market continued higher. So this isn't really a conversation about always buy that dip. But usually markets that roll over and become these horrible bear markets are usually a process. In other words, they take several months to roll over and you have plenty of time to get out. This is a short-term kind of quick, violent sell-off, and I think that's actually going to eventually be a buying opportunity.
And the thing you'll get too is you'll get people who, much like myself, I'm thinking, you know, well, if it drops another 5% or so, maybe I jump back in with some money that I've pulled out.
How long have people been waiting for that inevitable drop? And literally over the last 15 months, it hasn't come. We haven't had anything close to a 10% drop, and so they're going to get that opportunity at some point.
But that's the worst thing investors can do, too. I mean, smaller investors is, you know, people try to time that market. That's when they end up losing their shirt.
Well, if people were waiting at 12,000, so I'm going to wait for that 10% drop.
Right.
It
now
was
you're
at 16, and if it goes to 15, they still missed out. Exactly.
Right,
yeah.
right.
So you have to be methodical in here. But I would say that if you're fully invested, you know, take a little bit off the table would be my advice to those people.
All right, give me your one to watch. What are we looking
Actually,
at
what
today?
this is it's not a company, it's an exchange-traded fund, and what it does, it moves opposite of the stock market. So if you want to buy something that actually goes up on days when the stock market goes down, it's called the ProShares Short S&P 500 ETF, and the symbol's SH. And
you're betting on the short, is that what that is?
I've got a little bit of this right now just to reduce volatility. So I have obviously a lot of stocks that have been going down the last week. But you add this to the portfolio and it neutralizes it a little bit. So again, it's a tool in the tool belt. It's not something you want to own for the next 12 months. It's something you might want to own while things are a little turbulent right now.
So if it goes ahead and drops 12, 14, 15%, when you think you're at that 15%, you're at the bottom, you dump out of this thing?
Correct, exactly.
Look at that. I'm going to be an investor before you know it. Carl, good to see you. Thanks for coming in. For all the latest in business news, go to KENS5.com, click on the business link under news. Well, the big game is finally here, whether you're going for the Broncos or the Seahawks or the commercials. Everyone has the reason to watch the Super Bowl. We'll look at some of those when we come back.
Shopping for leather furniture? Hi, we're the Sullivan family. I'm Pat.
I'm Candy, and this is Toby, our little rescue dog.
We're the owners of Choice Leather, South Texas' oldest and largest leather furniture store. If you're shopping for leather furniture, please visit one of our family-owned Choice Leather stores. We offer a bigger selection, better quality, and a low price guarantee. Visit us during our winter sale. Choice Leather, now 2 locations, and as always,
Thank you for shopping locally with family-owned businesses.